welcome back to our X Fuels channel where we discuss issues and trends facing the oil and gas industry. As always, we have Mr. Pranav Khan joining us. Hi, sir. Welcome.
Hi, thanks, and it's great to be back on the show.
It's a pleasure to have you here, sir.
Pleasure.
My first question to you today is, while crude prices registered a weekly gain, they fell by $2 on Friday. What were the main reasons for this big fall?
Yes, it has been a very interesting week. The prices were going up and they had reached up to 82 barrels for the Brent before on Friday falling, and then it closed at 79.04. So it was a big fall for a day, and primarily reasons are a few. The crude prices at the beginning of the week started shooting up on the announcement, or rather the unexpected announcement of lifting of zero COVID policy in China. So that was met with very bullish reactions from the market participants. And it continued despite a very large inventory buildup reported in US, but that could not really tame the sentiment. So it was all very nice. But then the news about the real impact onto the physical trade of the Russian price cap started filtering in, which was not a surprise. And it was that Russian crude was available at the price cap with two important things. Russia had always insisted that it will not supply its crude at the price cap mechanism, but markets have a way. So effectively, Russian crude was already selling at $60 or less. So without Russia accepting it, market participants could get the Russian crude officially despite the sanctions because it was meeting the price cap requirements. So all players and the shipping insurance and all the paperwork was legit on paper, on technical grounds, because it was at $60 or below. While Russia officially is not supporting it, but the actual trades are happening. So the kind of supplies it released for the market at that price point has been a huge bearish trend. So that is going to be the key theme going forward into the weeks ahead. So just to recap, the key theme is the likely impact of the zero COVID restrictions going off from China and the likely impact of the actual physical trade of the Russian crude happening at below $60 and where the product could go anywhere with all the shipping and insurance provided by the Western companies, because technically it meets the price cap requirement. So it's going to be interesting week ahead, and we believe it will continue to be in bearish territory. We do not foresee immediate uptick in the China crude demand as a function of lifting of the zero COVID. It will take some time. It is bullish for sure, but we need to wait and watch. It will go very gradually up, and gradual is the key word here. So we believe prices will remain in the bearish territory.
Well said, sir. I do agree that this is going to be a very interesting week to look forward to. My next question to you today is, bitumen prices have been falling for the past 2 weeks. Will the declining crude prices put further pressure on the prices itself?
Further pressure, yes, and not only from the declining crude prices, as we are into the end of December and January, which from the demand side are the lean months. And in some of the major producing centers like Iran, with this winter, the production also gets curtailed. So all these things would continue to bear upon the markets, and we see it remaining in the bearish territory.
Okay. As always, thank you so much for that. And thank you all for watching. It was a pleasure to have you here.
Thank you. Thank you so much.